What's up, guys? Today we're analyzing Southwest Airlines company. I basically saw Everything Money guy talk about it, and he was saying it's undervalued. So I want to do my own analysis and provide you guys with another perspective on this company. So let's take a look. So 5-year chart, they are down 42%. Absolutely have gotten destroyed in the past 5 years. So this may present a good buying opportunity, or maybe they're just going to continue their path downward. So let's take a look. They are a $17 billion company, fairly large, but not like super, super large. And then the price to earnings ratio in the past 12 months is 39. So um, pretty high. Hopefully they've got some growth, or maybe it's because their margins last quarter were pretty bad. Let's take a look at the financials. Here are their statements. So we went from 21 billion in 2017 up to 26 billion in 2023. That is some growth over that course of time. I'd say probably on average, what's 21 up to 26? It's like 3% probably. I actually have a CAGR calculator here. I could actually calculate that. 21 up to 26 over the course of 6 years. Or wait, 1, 2, 3, 4, 5. Yeah, 6 years. 21 up to 26. Let's just do this calculation real quick. 6 years. And yeah, it's 3.6% revenue growth over that course of time. And then their gross profit actually has not followed very closely because the costs have gone up by so much, and so that's why the company has gotten hit, because their margins have gotten hit so hard. So they really have to increase prices if they want to continue like good profits, because yeah, their profits have not been very good the last few years. Yeah, net income right here. They were at 3 billion, 2 billion, and then they just kind of fell off a cliff and they never recovered. And last year they only did 465 million in net income because the margins are so bad right now. Balance sheet. We're taking a look at the balance sheet, and they do have negative net debt, negative 2.27 billion in debt, so very very good balance sheet actually, which is what you really want to see that for an airline, because I would say that a lot of airlines probably do operate with a lot of debt. Cash flow, buybacks, they're not really doing any buybacks, and debt, I mean, they haven't really been doing too much. They paid some dividends last year, at least. Checking out their stats page, yeah, we've got their operating margin right here. Has been pretty bad, honestly. It's been so super, super low for the past couple years. But if they could get it back to that 13 or 14%, that would be amazing. Actually, this one year they had 18% with 15% net margin. That is really, really good. If they could get back to that, that would be very helpful. Let's compare this company to like American Airlines, AAL, and see what American Airlines is doing. 5-year chart, American Airlines is down even worse than Southwest. They're down 50%. They have a price to earnings ratio of 14, so a lot better. They are a smaller company than Southwest. They have 1.5% margin with almost $1 billion in net income. Uh, Honestly, this seems like way better of a deal than Southwest. They have oh my gosh, American Airlines has almost double the revenue of Southwest. So maybe I'll have to look into American Airlines next, because this actually seems like a better deal than Southwest. Um, yeah, it's really interesting. The margins are so bad in this business because it's so competitive. Um, they have a lot of shares. Well, okay, they did do some dilution, but that's because they need to. Maybe their balance sheet's kind of bad. Yeah, they do have a ton of debt. 32 billion in debt is a lot. So maybe that's why Southwest might be better, because American Airlines has 32 billion in debt, which is a lot, especially when you're only making $1 billion in income each year. Yeah, not good to see. We could also compare it to Delta. Let's compare it to Delta real quick. Delta is a $30 billion company, so even larger. 6 price to earnings ratio is really good, actually. And they're only down 5%. So it seems like Delta has been the best performer out of the airlines. They have 58 billion in revenue, which is a little bit higher than American Airlines, but they actually have a net margin, yay, of 8%. So yeah, that's the premium margin for you guys at 8%, whereas the other two were at like 1% or less. So Delta actually producing some profit margins, and that's why they are actually looking decent here with 4.6 billion in income, and the balance sheet they have 23 billion in debt, which is kind of a lot. So at least with Southwest, you have like no debt. We can actually go to the analyst estimates, and we are going to run them through a DCF model, so don't worry. We've got 1.63 predicted into, and then up to 235 in the year after, which is like, what, like 40% more. And then revenue estimate at 28 billion, going up 6% to 30 billion. Not quite sure if they're going to be able to hit that because historically they've grown at 3.5%. So 6% seems a bit steep. We go to the DCF model. Let's check this out. And this is what I put in for them. So I put their EPS estimate right there, the revenue estimate right there, net debt of negative 2.2 billion, and then zero buybacks, discount rates of 10% because I want a 10% return on all my stocks, and an exit multiple of 15. I think that's fair for an airline. Right now, Delta is trading at 6, so maybe this is too high. Maybe I should go for 12 for an exit multiple. And let's see what that does to our fair value. So this is using earnings, but I really like to use the profit margin one because we can predict the profit margin into the future and also using the revenue growth. So I use the analyst estimate at 6% for the revenue and then increasing by 3% because just historically they've grown by like 3.5% per year. So I think 3% is fair for them going forward. And profit margin of 2%. That's what they did last year for Southwest, which is LUV. Right, they did 2%. They did 1.7% last year, 2% the year before that. But they have done 10% in the past, which is a good sign. And just checking to see if there's anything else to watch out for. Yeah, they did. Yeah, they did that 10% even like with no like unusual expenses or anything like that. So it is legit. So I put 2%, and then if they can increase their profit margin to 3, 4, 5%, I think probably 5%. I don't know if you'll ever get up to 10%, but man, if you could, maybe 5%, maybe they get up to 5% and they keep that. That's what they're priced at right now. Okay, so they're priced for their profit margin to increase to 5% and then to stay at 5% for the lifetime of their business. And in that case, it'd be worth $32 a share, and you'd be expecting a 10% return with an exit multiple of 12. So yeah, it actually seems like a good company. Like if they might even do better than this. Like they might be able to get their profit margin back up to 10%, and if they can do that, then their fair share price is probably like 60. So yeah, definitely not a bad company. Yeah, let's just see if they can get their profit margin up to like 9%. We'll say 9%. Then their fair share price is at $48, which would mean like maybe a 15% return. Yeah, even better than a 15% return. Would mean like a 18% return moving forward. So yeah, um, this is actually pretty compelling, I think. Now, of course, they might not do this type of growth, and we could see some other scenario play out where maybe their profit margin just sticks around 2% because that's what they did the last couple of years. So why couldn't their profit margin stay at 2%? And if their profit margin stays at 2%, then their fair share price is $16. And in that case, you'd be expecting maybe like a 5% or maybe like a 3% return. Ooh, even worse than that. Maybe like a 1% return. Yeah, even worse than a 1% return if they kept their profit margin at 2%. So this is one where you're really hoping that they increase their profit margins up to like 3, 4, or 5% and not staying at 2%. So yeah, that's the risk with this one. And yeah, if you have any questions, make sure to leave them in the comments. And you can use this for free. I leave it in the description, so make sure to click that link and try it yourself. Maybe you got different revenue numbers for Southwest. Otherwise, I hit that like button, and I'll see you in the next video.